Hello everybody, welcome to another case study. In this video, we will be discussing my EURUSD structural disruption setup on March 26, 2024. And as you can see, based on my Twitter post, you can see my before into the after. So let's go ahead and get straight into the breakdown. As I've mentioned before, because I am a scalper, the main levels of structure that I'm looking to kind of deal with whenever I'm looking for a bias less execution as a scalper is usually my micro, my scalp, and my minor intraday. Anything above the minor intraday, meaning the major, the swing, and the position, I'm not too worried about, just because my executions are on the scalp timeframes, and usually my targets are in those scalp parameters as well. So whenever I am looking at, let's say, a major intraday time frame, I don't really care that this is bearish because I'm not looking to catch the entire move. If I was looking to catch the entire move, okay, then maybe I would justify having my major intraday invalidations in place, and I'd be looking for major intraday targets, right? So because I'm not doing that, the main things that I'm looking for in my major intraday is points of interest and areas of liquidity if present. And as we can see, based on the previous London session, we were reacting from a previous H1 SC because we took out a previous wick, aka liquidity, leading into a semi-violent move in the opposite direction. So that gave me a point of interest, right? So even if we have a reaction from the POI, that does not justify a bearish reaction, because we have to be bullish in order to reach the POI. So if I'm going to be bearish, I need to see a conversion. So that's when I start looking into my scalp timeframes and seeing what exactly is happening internally. All right, so I know, like I said before, that we have to be bullish in order to reach the POI, right? But we can react and we can have a conversion, but it's about getting the timing of that transition. So if I'm going solely based on solidified points, my blue circles are my minor intraday and my orange are my scalp. I'm not too worried about the structure within the micros, solely because they go from bearish to bullish more often than they don't. So I'm more focused on my scalp timeframes, or my scalp structural points, sorry. So if we're going solely based on solidified points, where is the last low into high? That is here, because we took out a previous wick and that led into low, high, low, high, low, high, low, high. There is no CBOS, no type of break to the downside in this entire range. So this is my immediate scalp range of the minor intraday move, which led into the H1 bearish POI. So if you note here, there is actually a continuation that failed. However, I am not considering this to be the full structural disruption, because the full range is here, meaning that if we are to break this, then we have a scalp reversal BOS, but we have a minor intraday CBOS, meaning that once we break here, even if there is a type of reaction here, it's not my reasoning to sell, only because we still have the CBOS in place. And who's to say we don't come into, right, a demand zone and then go into the upside because of what the major intraday is doing. So this reaction of the POI does not become relevant until the present structural disruption. And in case you guys don't know what I mean by structural disruption, there are three models that we execute based off of in the Endure program. That's OFD, order flow disruption, SD, structural disruption, and LGC, which is a liquidity grab continuation. So LGC, and if I'm going to simplify these models for you all so you guys can kind of follow along, a structural disruption and an LGC are both liquidity grabs, but the only thing that really separates them is that an LGC favors previous direction and SD is actually opposing the original direction. Therefore, an SD is inherently a reversal, whereas the LGC is inherently a continuation, right? There's obviously a bit more detail to that, but that's just so you guys can follow along. So when I'm looking for a structural disruption, I'm looking for a pullback low or pullback high to essentially fail, right? And because I just mentioned that this break of the immediate scalp range is the CBOS for what's in the minor intraday, which is blue to blue, right? Once we have a solidified low after that break, that is the pullback low. What do I mean by that? Well, if we can see internally, there is some bearish structure which led into the CBOS, but it's only from here where we had a opposing CBOS into the upside, right? So even if this is not a conversion to be bullish yet, because in order to be bullish, I maybe would have wanted order flow disruption to give me reaction, a break, and then I would be bullish. But because we took out this previous high, this internal micro high, and then led into an opposing CBOS, that means that the pullback low of the low high retracement has technically failed, right? This is an unwillingness to continue higher. This is a reason for me to believe that we will now be bearish. So taking some of that stuff out, once the pullback low has been taken, you can see that there's actually an internal scalp range to play off of. So my POI was based on an M10 point of interest based on the inefficiency fill with my SO at the invalidation. And that is what led me to then pursue, right, an extreme demand zone, which is present closer to the low of the minor intraday solidified low. And the reason why I'm aiming here and not the entire low is because, like I said, a structural disruption is inherently a type of reversal setup. And even though we had the structural disruption here, I cannot neglect that we are still bullish externally because it took this bullish range to get into the H1 POI. So I'm always covering myself on both sides. So even if I have a justified bearish scenario, I have to consider that potentially we could see a reaction at the extreme demand zone into the upside. So I'd just rather not deal with that. So I'd rather just put my TP at that point of interest, and that leads me to about a 1-to-3 risk to reward in about 30 minutes. So not too bad. I would say it's pretty textbook. I could have even aimed for the previous low, like I said, just that I was considering the fact that we could reverse because we are still externally bullish. And that would have been about a 1-to-4, which is also very, very good for, for about a 30-minute trade. So yeah, other than that, everything else pretty much textbook. So in summary, solidified points leading into a model, right? The model is led by the taking of previous liquidity, creating a bearish structural range, and then we do it again as the pullback low is then taken. So my direction is technically bullish. My liquidity has been swept, and I have an execution based on a a structural disruption setup. So once again, following the DLE framework, and that DLE framework led me into TP. So I hope you guys enjoyed. But last thing before I go, if you guys are not in the free Discord that we have, link in bio, by the way, we are actually working on, rather than making a brand new course, we want to make a ebook pretty much showing everything that we have, from everything technical, everything psychological, and everything in between there, kind of just explaining everything in a book format, but not a course format. I just released the table of contents today. So if you guys want to check that out, feel free to join the Discord, link in bio, and feel free to give me some feedback on what you think, etc. But other than that, I hope you guys enjoyed, and I'll see you guys in the next one.